Hey everyone, CryptoVatsik here. If you enjoy this video, I'd really appreciate it if you supported the channel by liking and subscribing. You can also follow me on Twitter at CryptoVatsik for more frequent updates. Nothing of what you're about to see is considered financial advice. These are my opinions only. Okay, so today's video, we're going to take a quick look at the Bitcoin log curve, otherwise known as the logarithmic growth curve, and how we can use this as a tool to predict price movements into the future. So as you can see, we have the growth here from the birth of Bitcoin over time and into the future. This is because log curves calculate on a forward-looking basis, assuming Bitcoin continues to be adopted over time, okay? So naturally with these log curves, price fluctuation is more severe in the earlier days, and as an asset matures over time and supply decreases, the curve will eventually begin to become less volatile and essentially look as though it is flattening out. And this is typical of a maturing asset or instrument. It's not unique to Bitcoin by any means. And it's not to be taken as a trading tool, in my opinion. It's not a guarantee. It doesn't mean that the asset can't trade outside of this log curve. It is just an estimate looking into the future based on price history. Okay, so it's just something else to keep in your toolbox when you're looking as an investor or a longer term trader. Okay, so with that said, let's get into some of the analysis behind it you see here. So of course, first off, we can very clearly see the peak of our markets highlighted in red here have tapped the log curve, the upper band of the log curve. Okay, so it's essentially our resistance over time. And these are major bull markets here that we see, right? So there's a major bull market here in 2011 that we saw, the second one peaking in 2013, and then the third one peaking in 2017 that I'm sure lots of us are familiar with. And then of course the bottom of the band acting as that support, right? So we've touched it many times here with the green circles. Okay, these are marking the bottom of our bear markets, right? So marked our bottom here, marked our bottom here in 2015. Again, it actually tapped it here as well again in 2016, and then marked our bottom here when we had the COVID crash in 2020, right? Okay, and take note to the length of duration within these bull markets. Okay, so basically from the bottom of the bear market to the peak of the following bull market, right? So this first one we had 24 bars, okay, from the bottom of this bear market to the peak of that second bull market here. That final run up where we closed and tapped the top band of the log curve, okay, was 22 bars. And we're on the monthly, right? So each bar consists of 1 month. Okay, so essentially 24 months. Then we had the second here, which was 35 bars, okay, 35 months from the bottom of the bear market when we finally marked our bottom. We did tap, we tapped the bottom band twice here during that time as support, but essentially our bottom was marked back here, okay? So that's, that's the next one. So you can see they're increasing, right? So we went from 11 to 24 to 35, okay? So as over time, whether or not you believe in extending market cycles or not, you can't, you can't really refute the fact that they are getting longer, right? So if you look at our current situation now, we have from our bottom here that we had marked, okay, which was back in 2019, marked our bottom, or you could take it if you prefer from this bottom, but technically this was a lower low. Okay, so this was actually a higher low. The March 2020 COVID crash might have seemed worse because it was so aggressive and quick, but it wasn't actually our low, right? It came very down close, but it made a higher low. Okay, so I'm taking it from the low here from over in 2019. And when you look at where we peaked, okay, there's a couple things here to note. So the first thing is we peaked, if you think we peaked here, okay, in 2021 at 69,000, whatever it was, to be exact, we didn't actually tap the bottom of the band. We didn't actually touch it. So that's why I've marked this as gray for now, because it's kind of an unknown at this point. So that was just something I noted, that it didn't touch it, and it tried to get up there again, even a second time. We made a higher high technically later in November 2021, but we didn't actually come up and touch it again. Okay, it failed and then came back down, and then we actually didn't tap the bottom either. Okay, so that's the first thing to note that I kind of thought was interesting. The second thing is that if this was our peak, and people think that we're just going to go into this extended bear market, and we're actually going way lower than we're at right now for a longer period of time, then that means that this last bull market, so to speak, was only 27 bars, right, from the peak. Or you could take it here, I'll just draw this over it, right? You could take it to this peak, okay, if you wanted. It's still only 33 bars, okay? So, and the reason why I'm taking it from this peak here is because I feel that this second peak over here was really a corrective structure. Even though we technically made a higher high, it's still an ABC corrective structure, in my opinion. You can go check out my previous videos on that. But essentially, the point is that this last bull market, then this last cycle, right, which was our first, second, third, fourth cycle, would have been shorter than the growth that we've seen, the lengthening that we've seen in previous cycles. Okay, so that's interesting, and I'm not saying that's not possible. I'm not saying it can't happen, but if it just kind of goes towards that lengthening cycle argument that we haven't peaked necessarily yet, and our peak is still to come potentially, right? And so if you extend it out basically to 55 bars is pretty much the kind of the estimate that I have is for our actual final peak when we're going to tap this upper band, and take it with a grain of salt. Okay, I'm just saying that essentially I would say over the next year is when we will actually see that final peak where we tap the top of the bottom band. And that's not to say we can't hug the bottom here. You know, I would not be surprised if we hug this bottom band for quite some time and just start to basically start to, you know, accumulate and recover. And, you know, with everything going on in the economy right now and whatnot, then, you know, you can see it back here. We did it. We hovered right around the bottom, you know, from, I don't know, what was this, 2015 to 2016 for like a year. We kind of just hovered, you know, making higher highs and higher lows, but we hovered around that bottom band, right? So you could definitely see something like that again playing out. Now, no one can be certain with the timing of this. You can only make estimates essentially, right? And so with that, you know, it's going to depend on environmental conditions of financial markets and the economy. So, you know, I think that if we're to make the argument that we'll break below, because we have temporarily broken below this before, and I've actually drawn this log curve out. There's an indicator here that I'll show you in a second where we're actually below the log curve. It's an indicator in TradingView, and it was temporarily below in the March crash, and actually, you know, it's something like this where it runs like this kind of thing, and so we're actually below it on that indicator. And so, you know, I think that if we were to say that we're going to continue lower and continue to now act as resistance on this lower band of the growth curve, you know, then in my opinion, there would have to be something worse over the next year or so than people are expecting, because I currently think the recession and the fear, uncertainty, and doubt is being priced in as we speak. That's my opinion. You know, starting back from early 2022 with the war in Ukraine, you know, I think people are quick to assume that things are not priced in yet. And I do think that kind of marked our downfall of the market from the war back here. Okay, so I think that we're starting to get to that point where things are starting to be priced in. And if there's something new that comes into play that's a bit more unforeseen, then I think that could keep us below the bottom of this band for a longer period of time, okay, or push us lower in prices. Because again, I mean, you know, Bitcoin does what we least expect, right? So people are expecting it to come down because they're expecting the recession, they're expecting interest rates, you know, they're expecting people to go broke, and they're expecting the war to escalate. And so these things, you know, make people have the safe assumption that, oh, prices are going to come down further, I'm going to wait, I'm not going to buy. But what did everyone expect up here when we peaked at 60, you know, 69K, whatever, whichever one you want to take? What did everyone expect up here? I mean, be honest. I mean, I'll be honest with myself. Okay, I expected 100K. I thought we were going 100K. I thought at least 100K. And what happened? I mean, everyone's quite surprised. We made a higher high. Of course this is going higher, kind of thing, right? We got to touch the top of this band, and at that point, we would have gone further above the band, right? We actually would have deviated above if we had hit 100K. Okay, so it kind of, in hindsight, it's 2020, but it kind of makes sense that we'll come back down. Everything starts to price in and it cools off, market cools off, sellers get exhausted. We start to hug the bottom band again, making slow recovery, but steady higher highs, just kind of accumulation area over time into 2023 until we can finally get our full recovery and final push in this bull market, get our final wave up to 100, potentially 100, 150K further along into time of this log curve. Okay, so you can see we touched the band up here further in time. So later, second half of October would mark potentially our top, and you can see we touched the top of the band. What's the price there at? So as an example, take it with a grain of salt, $147,000 here. Okay, so and that would play into the argument that this wasn't our peak because we didn't actually tap the top and we didn't tap the bottom, right? So this was kind of just, you just take it like in here, like this was a peak and this was a bottom. So you could call it, kind of a mini bear market, but it was really within this overall bull run where we eventually tapped the top and then had our bear market and tapped the bottom. So we're just kind of playing around in the middle here in the meantime, talking about, where it's going to go when, all you got to do is look at the chart and wait and see. Okay. So anyways, that's just kind of my thought for now. And these are my opinions. So I think this is definitely a realistic play, and I'm going to be watching this. I've shared this chart out many times before. I'll continue to update it. But I guess at the end of the day, I think that my thesis remains the same. And we should expect to see all-time high for Bitcoin sometime into later 2023, potentially 2024. Okay, so really don't take this line. It can hug like this, and it can be up here. Okay, so just take it, to each their own. Take it with a grain of salt. Do your own research. Do your own analysis. Look into this stuff, and make your own thesis, and give me some feedback. I welcome it. Would love to hear from you. So anyways, thank you so much for joining. Hopefully you enjoyed this video, and we will see you on the next one. Cheers.